So Unigestion focus on global, small and mid-market across three strategies: primaries, secondaries, and directs. On the primary side, we invest in established and emerging managers who pursue buyout and growth strategies, and we target funds typically below 2 billion. We focus on funds that will pursue strategies that can be resilient in challenging times. We will continue to do so in the years to come, as we have been doing in the last few vintages, where we have expected that economic downturn would arise. So this is basically our overall view of the market. This doesn't really change versus what we have been seeing the last few years, but COVID has just brought further validation that Unigestion approach on the primary funds investments was the right one for the years to come. So as I mentioned before, we invest in primaries, secondaries, and directs. We invest globally. We are driven by the quality of our pipeline. So if the best opportunities arise in Europe, we do more Europe. If they arise in North America, we do more North America. We also selectively invest in Asia Pacific. And that for us means developed Asia and Australia and New Zealand. So we'll go to the geographies that will bring the more attractive opportunities. And we have offices and resources on the ground that can allow us to follow the best opportunities. We pursue investment teams. So our investment teams spend a lot of time on doing sector researches that allow us to build conviction around some subsectors or some businesses' activities. So at Unigestion, we try to invest in opportunities that follow 9 investment teams that are very well known to all our investors and that we refresh on a regular basis depending on the changing environment on the macro side as well. So at the moment, we're looking at businesses that can impact what we call the future of the work, how healthcare can be re-engineered, how services can become more efficient, resources can be better utilized, supply can be localized again. So a broader range of topics, as you can see, that we believe will drive the returns in the future. We believe at Unigestion that sector-focused funds can bring superior returns, and we particularly favor the teams that have specific sector know-how to drive value creation and returns for our investors. So in summary, this is where we've seen the best opportunities in the market at the moment. So at Unigestion, we deploy roughly 400 million in primary funds investments every year across North America, Europe, and Asia Pacific. We expect that level of deployment to remain unchanged or potentially to be even higher. It's fair to say that the bar is higher at our investment committee discussions to approve a new transaction, being a fund or a direct opportunity. But we continue to believe that there has been enough opportunities in the market focusing on our core investment scope where we can continue to deploy these levels of capital attractively. We look at emerging managers, a great part in our pipeline. We also follow a lot of established players. Some of them we have been investing with, and with those we really look at re-up seriously, and we take the decision that makes sense for our investors and for our returns. We expect that to continue unchanged. So I would say that in summary, the allocation will remain unchanged or slightly increased towards private equity for next year. So at Unigestion, when we invest in a new primary fund, we look at it as a long-term relationship. We have strategic partnerships with our GPs, and we are proud of developing and have been developing that over the years. And we'll continue to do that very actively when we add emerging managers to our portfolio, which is a great focus of our primary activity at the moment and will continue to be in years to come. We look at co-investments as just another leg of the partnership with these GPs. So we would seek to continue working together with them, not only as LP-GP relationship, but also on the same side of the table doing deals together. We can underwrite transactions at the same time as the GP. We have the resources internally and also the financial means to do it. So we appreciate to be brought to deals by the GPs earlier on, so we can also bring some value to the table and leverage on the knowledge that we have been building by being a private equity investor for over 20 years and having a portfolio of over 300 funds. So that is really one of the ways we cooperate with the GPs. Lastly, and equally common, we also work with GPs on syndications of co-investments where the GPs would need extra capital. And Unigestion is able to deliver their timelines, which for people that don't have such a dedicated team is less usual, but we can, with speed of execution and quick knowledge of the market, we get certainty on the transactions and are able to execute on deals alongside the GPs. So overall, co-investment is at the core of what we do at the moment. We look at it as one of the parts of the relationships that we hold with the GPs. And we have been able to invest across the globe, like our primary activity, both in Europe, North America, and Asia Pacific. We have invested in several sectors, although we have a preferences for businesses that are with recurrent revenues, that have high margins and have high cash conversion. We typically don't like highly levered businesses, and we really believe on growth stories, primarily where Unigestion alongside the GP could bring value to the business. So for Unigestion, the business will be as usual, I would say. We will continue broader the GP relationships exactly for the reason that we will continue focusing quite a lot on emerging managers. We will look critically at re-ups, and the existing relationships will have to continue to deliver for our investors in terms of returns. But the focus will be on not on consolidating, but rather making the portfolio as wide as it needs to be so that we can capture the attractive opportunities that we see in the market. So there's always a decline rate. So the fact that we have been investing in a GP for 10 years doesn't mean that we will do the next fund. And so there's that attrition will always be there. And as there are more emerging managers arising in the market, then we will continue following that trend because we remain very active on that, and we have dedicated capital that we can allocate to this part of the market. So no rationalizing in sight. We may remain the number of GPs in the portfolio flat because we have decided to decline on some re-ups and bring the new ones. But on average, the way I foresee it, looking at our current pipeline, is to have broadened the number